ladies and gentlemen, stop scrolling and listen carefully, because what I'm about to reveal will change the way you think about money, investments, and the very system you trust with your life. Right now, most people are asleep trusting their banks, their papers, their currencies, thinking everything is safe. But the truth is far more dangerous than anyone admits. Silver, yeah, silver is about to do something the world hasn't seen in decades, 330, a number that will sound impossible to most, unbelievable to many, but entirely inevitable for those who understand the forces at play. And here's the kicker. It's not a random spike. It's not speculation. It's a perfect storm of supply shortages, industrial demand, economic instability, and shifting investor psychology. All of these forces are converging at this exact moment. And when they hit the market, it won't move gradually. It will explode. You might be thinking, this sounds dramatic. Good, because if you don't feel the urgency, you're not paying attention. Most people won't even realize what's happening until it's too late. They'll watch from the sidelines, confused, panicked, unprepared, and that's exactly what creates opportunity for the few who understand the warning signs, the few who see the pattern before the masses do. Today, I'm going to take you step by step through this convergence. I'm going to show you why supply can't keep up, why demand is about to surge like never before, how macroeconomic forces are quietly pushing this market to its breaking point, and why sentiment is the hidden catalyst that will trigger the breakout. This isn't fear-mongering. This is fact. This is preparation. And if you pay attention by the end of this video, you will know exactly what to watch, when to act, and why 3030 silver is not just possible. It's approaching faster than anyone expects, so stay with Recapio Creative. Daily YouTube recaps in your inbox. Stop listening for hours. Start reading in minutes. Every morning at 8:00 a.m., our AI-powered digest lands in your inbox with all key insights from your favorite YouTube channels. Start your daily recaps and sponsor me. Stay focused and keep your eyes open. What I'm about to show you will change the way you see the market forever. This is not just another silver video. This is a rad art, and ignoring it could be the most costly mistake you ever make. When people talk about silver hitting three-digit prices, most think it's hype, a fantasy, or the same old bull market dream. They don't understand the real engine behind explosive price moves. The real catalyst isn't a rumor, not a prediction, not even investor excitement. It is something far more powerful, far more stubborn, and far more dangerous. Structural supply deficits. Once a commodity slips into a structural deficit, you are no longer dealing with a market. You are dealing with a pressure cooker, and silver has been sitting in that pressure cooker for years while the world keeps pretending everything is normal. Here's the truth. Nobody likes to confront. The world is consuming more silver than it can produce. Year after year, industry drains silver faster than miners can dig it out. And mining output isn't just slow, it's weakening. Or grades are full, meaning miners are extracting more dirt and getting less metal. The easy silver, the silver our parents and grandparents depended on, is gone. What's left is deeper, harder, more expensive to extract. It's like squeezing a lemon that's already been squeezed dry. No matter how hard you press, the juice doesn't increase. But the world behaves like the supply problem doesn't exist. Manufacturers assume silver will always be available. Investors assume miners will magically scale up production. Governments assume they can print more money, and silver will obediently respond by appearing out of the ground. It doesn't work that way. Mines aren't factories. You can't whip them into production with a policy, a speech, or a press conference. If a mine needs 80 years to open, you can't demand metal next Tuesday. That delay, that lag is exactly what sets up explosive price movements. Meanwhile, industrial demand isn't slowing down, and it's accelerating. Solar panels, electric vehicles, batteries, electronics, medical tech, all of them are devouring silver like never before. And here's the irony. The greener the world tries to become, the more silver it consumes. People celebrate solar adoption, but forget that every solar panel eats up silver. People praise EVs, but ignore the silver running through their circuits. Humanity is building a future that relies on a metal we're running out of, and nobody in power seems alarmed. Mining companies know the truth. They're not hiding it. They publish the declining or grades. Every year they issue reports saying new discoveries are historically low, yet the market shrugs. Investors shrug. Governments shrug. That disconnect between reality and expectations is where fortunes are made. When a market finally wakes up to a structural deficit, the price doesn't rise, it rebalances violently. It snaps upward because it has no choice. And that is the heart of the silver story. Not speculation, not emotion, not hype. Silver is in a long-term supply deficit with weakening mining output, rising extraction costs, shrinking ore grades, and slower discoveries. At the same time, the world is building technologies that depend on more and more of it. This is the kind of setup that doesn't lead to a gentle bull run. It leads to a surge, a shock, or recalibration of value, the kind of move that makes latecomers panic and early movers wealthy. That's why smart investors don't wait for headlines. They act before the world figures out what's already happening under its feet. Most people still think silver is just a precious metal, something you buy, store, and forget. They haven't realized that silver has quietly become one of the most important industrial resources of the modern age. The world has changed, but their understanding hasn't, and that ignorance is exactly why the coming move in silver will shock them. They're stuck in a 1970s mindset while the world has moved into a green tech revolution that is consuming silver at a pace the old models were never designed. Look around you. Everything is becoming electric, digital, efficient, and green. Every country is racing toward renewable energy targets. Every auto company is shifting to electric vehicles. Every tech company is pushing for faster chips, cleaner power, more efficient devices. Yet, what nobody talks about is the metal that makes all of this possible. Silver, not copper, not aluminum, silver. The world is electrifying itself, and silver is the conductor at the heart of it all. Solar panels don't work without silver, not less silver, not alternative metals. They need silver's unmatched conductivity, and as nations commit to massive solar expansion, the demand curve doesn't rise gently, it explodes. Every rooftop, every solar farm, every government renewable initiative is effectively a giant vacuum, pulling silver out of the global supply. Nobody is putting it back. Electric vehicles are even more demanding. People talk about battery metals like lithium or nickel, but they forget silver runs through the control systems, sensor circuits, and charging infrastructure. The shift from gasoline to electric is not just an automotive change, it's a materials revolution. A single EV uses significantly more silver than a traditional car. Multiply that by millions of vehicles per year, and you start to see the scale of the demand tsunami heading toward the silver market. Then there's the explosion of electronics, smartphones, laptops, 5G infrastructure, medical equipment, robotics, data centers. Every one of these technologies depends on silver's conductivity, reliability, and durability. And unlike gold, which gets recycled, most of the silver used in industrial applications is consumed permanently, locked away in landfills, shredded circuit boards, or products no one will ever bother to recover. Think about that. We are burning through silver faster than we can mine it, and most of it is never coming back. This isn't a temporary demand spike. It's a structural consumption shift, a one-way pipeline from mine to factory B product to landfill, and the world keeps accelerating that pipeline without ever asking where will the metal come from. This is where intelligent investors separate themselves from the average crowd. They understand that a commodity consumed and essential, unstoppable industries, renewable energy, transportation, electronics cannot remain cheap. It's impossible. When demand grows exponentially and supply barely moves, the price must adjust. Not gradually, but violently. Markets don't politely ask for balance. They demand it. The world believes it is building a greener, smarter, more efficient future, and that's true. But in doing so, it is unknowingly triggering the biggest silver demand surge in history. Investors who see this trend early aren't relying on hope. They're relying on math, technology, and the undeniable forces of global transformation. When the world finally wakes up and realizes silver isn't just a store of value, but the backbone of modern civilization, the price won't just rise, it will rape-rick. And that moment will divide the people who understood the future from those who were stuck in the past. Most people walk through life believing their currency is safe, their banks are stable, and their governments have everything under control. They think inflation is temporary, debt is manageable, and the financial system is too sophisticated to fail. That mindset is exactly why they get blindsided every time the economy shifts. They trust the system even when the system is quietly cracking underneath their feet. And right now, those cracks are widening, inflation eating away purchasing power, currencies weakening, debt skyrocketing, geopolitical risks rising. It's a perfect storm. And in storms like this, real assets, not promises, rise to the top. Inflation isn't an accident. It's not a mistake. It's a built-in feature of a system drowning in debt. Governments don't reduce debt. They dilute it. They print, they paper over problems. And every new round of money printing sends a silent message to anyone paying attention. Your currency is worth less than yesterday, and tomorrow it will be worth even less. People complain that prices are rising, but the truth is simpler. It's not that goods are getting expensive. It's that your money is losing value. When a currency weakens, people search for something real, something that can't be created at will. That's why silver becomes a magnet. During turbulent times, currencies around the world are under pressure. They're losing purchasing power faster than most people realize. Central banks talk about soft landings, transitory inflation, and temporary disruptions, but the charts tell a different story. Debt levels are historic. Interest payments are swallowing budgets. Nations are borrowing more just to pay interest on what they borrowed before. This is not stability. It's a slow motion collapse. And when a currency begins to wobble, people instinctively reach for safe havens. They want something tangible, something historically trusted, something that has survived every economic cycle. Silver fits that profile perfectly. Silver doesn't depend on a central bank. It doesn't require a government to guarantee it. It doesn't rely on political promises. Silver is silver whether the economy is booming or burning. That's why it becomes so valuable when uncertainty rises. It acts as a shield against currency weakness, inflation, and financial upheaval. When fear enters the system, silver becomes the insurance policy smart investors buy before the panic starts. But here's what most people misunderstand. Silver doesn't just respond to inflation. It responds to the loss of confidence. When trust in paper fades, when the public realizes their savings are melting, when investors start questioning the future of fiat currencies, that's when silver makes its biggest moves. It becomes more than a metal. It becomes a refuge, a statement, a hedge against the system itself. And this isn't some distant scenario. Look at what's happening. Global inflation, rising rates, weakening currencies, geopolitical tensions, banking stress. Investors are already shifting. Central banks are hoarding real assets. The world is preparing quietly while the average person is distracted. This is exactly why silver becomes explosive in times like these. It's not just a commodity, it's a lifeline. When the money you're paid and loses value and the system built on debt starts shaking, the smartest move is to own something that can't be printed devalued or manipulated with a keyboard. The world may ignore these warning signs, but those who understand the game don't wait for the collapse to start preparing. They move early. They secure real assets. They protect their future. And when the macroeconomic storm intensifies, as it always does, they're the ones who sleep peacefully while everyone else scrambles for safety. Most people are terrified of volatility. They want stability, predictability, comfort, the financial equivalent of soft pillows and warm blankets. But the truth is, comfort is expensive. Comfort keeps you poor. Real wealth is created in the spaces where others are too scared to step. Volatility is not the enemy. Ignorance is. And when it comes to silver, volatility is exactly what makes it one of the most powerful opportunities in the entire financial world. Silver doesn't move like gold. Gold is steady, slow, and deliberate, the tortoise of the precious metal world. But silver is the hair on jet fuel. When it moves, it doesn't take small steps. It charges, it leaps, it overshoots, it shocks people who weren't prepared. That's why I turbo gold. It carries the same safe heaven DNA as gold, but with a multiplier attached. Where gold moves 10%, silver can move 30% to even 100%. It doesn't whisper, it roars. People see that and panic. They don't understand that volatility cuts both ways. Yes, silver can drop sharply, but the same force that pulls it down can also propel it upward with violent strength when the right catalysts line up. And right now, those catalysts are lining up like dominoes. Supply shortages, industrial demand spikes, inflation, currency weakness. When these forces hit the market, silver doesn't gently rise, it explodes. Here's the part most investors never grasp. Volatility is a symptom of mispricing. It's the market admitting it has no idea how to value something correctly. Silver is cheap, not based on emotion, but based on math, based on supply versus demand, based on real-world consumption versus mining output. So volatility isn't a warning sign. It's a signal that the market is waking up. It's the shaking of the cage before the breakout. Every historic silver run followed the same pattern, long periods of boredom followed by sudden chaos. The chaos is the revaluation process. It's the moment the world realizes silver is not a 20-odd or 20th metal. It's a strategic asset capable of 3-digit prices. And when the switch flips, silver doesn't climb steadily. It surges so fast that people watching from the sidelines feel like they missed the entire move in a single week. The reason silver behaves this way is simple. The market is tiny. One large fund, one wave of industrial orders, one shock to the financial system, and the entire supply chain gets stressed. There isn't enough liquidity to absorb big demand quietly. So instead of rising gracefully, silver jumps violently. That's not danger, that's opportunity. Smart investors use volatility the same way surfers use waves. They don't fear them, they ride them. But here's the catch. Volatility punishes the unprepared. It rewards only those who understand the game. You don't chase the spike, you position before it. You recognize that the same volatility that shakes weak hands out of the market hands the strongest returns to those with patience, conviction, and strategy, and silver demands those qualities. The people terrified of volatility are the same ones who miss generational wealth cycles. They want gains without chaos, rewards without risk. But that's not how real markets work. Silver is the perfect example. High volatility, high risk, high reward. You don't buy silver because it's calm. You buy it because when the world finally wakes up, it won't just adjust. It will overcorrect at it, will rip break so aggressively that everyone who waited for stability will be left standing outside the opportunity they were too afraid to seize. Volatility isn't the downside of silver. It's the gift. It's the multiplier. It's the reason the metal has the potential